You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Gurwitz, Managing Director of the Charles Nenner Research Center. Welcome to the show, David.
Hey, good morning to you, good afternoon to me, and always a pleasure to be here.
And good day to everybody around the planet. My first question is oil prices. I saw the headline on your newsletter, The Triumph of Economists Over Geologists. Could you maybe explain?
Yeah, good question. We called the top in crude. I guess I'll reiterate for those who may be listening for the first time, we have a newsletter, Charles Nenner Research Center. People should Google Charles Nenner and go and mention they heard us, and they get a free month of the research that covers stocks, bonds, commodities, currencies, and economic indicators 3 times a week in Sunday charts. And we call tops and levels and direction, based on a bunch of pattern recognition techniques that Charles came up with. We called the top in crude in 97 several months ago, which was a pretty good call, and then said, the bottom would not go past 39. Let me read you yesterday's research. In order to cancel the sell signal in crude, we need to close above 47. Cycles at bottom. As pointed out in our forecast yesterday, it's unlikely we'll test our downside target of 39. So we do think it's going to bounce back up. We think 70s, imagine crude going back to 70 right now, and yet for so long it was 100, and people, that's the whole point of predictions and patience. When things get to a certain level, people just assume, how could it ever get there? Crude was 147 at one point. And Charles got on CNBC and said, this is the top, and everyone thought he was crazy. So we're used to that. So anyway, we think it's going to go back up, but they'll only buy it when it goes above 47, because that means a bunch of other indicators would have pushed away and it'll really go back to 70. And we crazily think if it gets past there, it's going to go back to where it was. Nobody thinks it now, but we're one of the few that do.
What part of the cycle are we in right now?
Well, short term is bottom. So we think, people would want to be long rather than short, or, very often not to do anything is something we're big fans of. A lot of times things are sideways unless you know what to do in sideways markets. It's best not to be involved. And that in itself is a very difficult position to take with all the action and the flow. And if you have some money sitting in the account and put a trade on, it takes 2 minutes. So it's so easy to press that button, it's much harder not to. So that's the answer is, as long as we close above 47, it's a buy signal.
Charles Nenner on Bloomberg said the Dow would drop from around 18,000 points to 5,000. Why would that happen, and is there a time frame on that?
Yeah, it's interesting. A couple of years ago, he said it, but he said it, he was wrong, but on another show around that time, he said it would start now, which is what we think is going to happen next month, is like a major top in stocks. And it'll be sideways for a few years, and then towards 2017, really bad for 3 years. Why is a very good question. Just we predict based on repeating patterns from the past. That's the only thing that we think influences everything. Then the news comes along and people say that's the reason it happened, but it tends to happen. The news that pushes things down tend to happen at cycle tops, and the news that pushes things up tend to happen at cycle bottoms. So we don't say A implies B. We're in effect using the quantum physics theory that B has to happen, therefore A shows up. And people tend to think A implies B, but in actuality it was B that was generating the whole action. So therefore, based on repeating patterns in the cycles, long term, there's a major top 2017 and a mess. And the mess is for 4 years after that, war cycles, copper's down, you put a whole bunch of things together. Interest rates will go up, the dollar's going to be a major top now, one more swoon, one more back up, and then on its way down. So all these factors, if someone was smart enough to figure out, which we don't think we are, all these factors look to us leading to the equity markets heading down, because that's what it looks like. But again, the newsletter is a better way to follow it than just me speaking occasionally.
Gold and silver, 3 and 6 months from now, what do you see?
Good question again. Let me go to the gold we wrote. And on Sunday, anyone writes in there, they can look at the Sunday. Last Sunday we covered long-term gold. Looks like a bottom in April. We wrote about this. Gold closed above 1175. generate a short-term buy signal. It can go towards 1220. Cycles are still down to April, and a close below 1157 cancels a short-term buy signal, but April is the time to buy, according to us, and we're looking at 1450 as a major point, 1400, 1450 this year, and if it goes past there, it will go back to its highs now. If it doesn't, there could be one more major bounce back down, which could be an Elliott wave down, but which might take it even below 1,000 again, although we don't think so. But longer term, past 6 months, we think it's going to go back up to its highs. Just people have to be patient, but April looks like a confluence of a lot of cycles bottoming. Silver, the same thing.
What about other commodities?
Well, crude we talked about, nat gas top last week, and we're seeing weakness, but there's a better cycle high second week of April. So we're looking for another bounce now, but longer term we think it goes back to $2, and which is what he called several years ago when it was 6. He said it would go to 2. Those are very hard things for fundamentalists to do, because how do you justify anything fundamental? You could always argue both sides very well in anything. You know, today I saw something why stocks can't go down, why bonds rates will always stay 2%. Their argument that wealthy people, they're just going to leave their money in bonds. You never had such wealth before, therefore the bonds will stay. And I'm answering your question about other commodities, but I'm calling bonds a commodity because it's a pretty big market, the bond market. Actually, you know, other than currencies, bigger than stock, because everybody can issue bonds, but only companies can issue stock. The interest rates were very high 30 years ago, very low 60 years ago, and they're low now, so we think that cycle is going to continue, and the rates will start being raised in September. And when rates are up, bond prices are down. If bond prices are down and stocks are down, it's going to be very difficult for people. And that's what it looks like to us down not too far from now.
Where should you go if bonds and stocks aren't working?
Great question. You look like a question. Shorting is one thing, not so easy for most people who have been buy and hold to go long. So that's something that's hard for most people. We recognize that, but that's one trade. Like Monsanto, we called on Sunday, cycle top on Monday, the news came out with this cancer-causing chemical, which I'm sure is not the only one they have. So all of a sudden, everybody's dumping Monsanto. So obviously there's something in the cycles that says stuff before it happens. Food down the road looks strong. Wheat is on a buy signal. You know, I think people need to extend water stocks, water companies. They should look into. Most people don't. Real estate, I wouldn't be leveraged. I know a lot of people ask me, they're real estate people, what should they do? I said, I wouldn't be leveraged. Most real estate is leveraged. It's the nature of the brick game. Buy it, leverage it, and hope your rents can take you past your debt service, you know, and a lot of people have done very well with that the last 40, 50 years. But I don't see with a reduction of rents coming if overall market is dead and overall less earnings, and then the real estate will get affected if you have banks, you know, pressing you. If you don't have a bank on you and you're making less money owning a house to rent or projects or, you know, commercial, you'll make less money, but you'll still have the asset so that when things turn at the end of the decade, you'll be in good shape starting then, because we think the 20s is going to be a very strong decade for stocks. And here we are sitting in 2015, so someone says, okay, I don't care about the next 6 years, I don't care to wait for 6 years. My attitude is don't lose money now, and you can make a ton then. That's better than going through aggravation the next 6 years and not having what you might have had then. And then if we've been right all this time up to this point, we might be right then. You have a great opportunity to make more than you would have made in these 6 years, time value included. But to answer your question, it's not going to be easy. It's not such a simple answer.
In tough times, it never is easy.
The opportunity to make money, but most people won't know to go short. And even if you go short, if things are really bad, who will be on the other side of the transaction? That's a big question some of the wealthier clients ask us. They have money, but whether they make 10%, 5%, they have money. They're rich. Somebody has $20 million. If he doesn't make any money next year, he still has $20 million. So it's a different animal than someone who needs to live off the money. So the question becomes, if he's got $5 million in some Swiss bank or some Dutch bank and wants to go short and his money sitting there, will the bank be there 4 years later on that trade? And I don't have an answer. Although some of the stocks that are publicly traded of those banks, we're able to look and see where it looks 4 years out. It's a very interesting study. We haven't published it, so I won't talk about it, but interesting to see what things look like way down the road and then to make some investment decisions based on that. Very fascinating. We have a few sovereign wealth funds as clients that have 80 billion, 100 billion. They don't think like you or I. They think 2 years from now, 4 years from now. So we do work that far out for them. We don't really do it for other clients unless they want to pay for 4 years worth of work up front. Because we actually have some idea what's going to happen in 4 years, assuming our system is right and assuming that the repetition of tops and bottoms is going to continue. You know, we may be wrong, obviously, but we have at least a basis for saying what's going to be 5 years out in stocks or bonds or commodities or currencies, because it's past pattern repetition.
I want to know, are we going to see flying cars 5 years from now?
That's a good question. I would think so. If you want my opinion, I would think, I also read a lot of science stuff, and I think we're going to see all the drones and all the, not only flying cars, but driverless cars, all that stuff, because in one sense, the technology will be available for that. And, 3D printing and, in devices that can be put on your body that can kind of monitor and do everything. I've been reading about that, and, it's kind of amazing what possibilities there are amidst the same time that war cycles are saying we're going to have such a mess. It's really sad, but that generally is what happens. You got the good and the bad together, and trying to predict how one's going to outplay the other. We think the war cycles, which are bottomed the last few years and lead to some pretty nasty wars coming, is going to be lead to the lowering the stock prices. We don't know that's the case, but it just seems that that's not something factored into normal fundamental stock people. They'll look and go, well, this year was up 8%, next year 10%. What happens if there's major war? What happens if there's major infectious disease? Forget Ebola. Just imagine if there's flu. What happens if there's, terrorist attacks in planes and people won't be flying? And, these are things that could happen that could really affect markets far greater than we can even imagine. That's what we think is embedded in the cycle. That's why we encourage all your listeners to write to charlesandner.com and say they heard us speak, and they can watch it, and hopefully it could help them.
We'll have more with David Gurwitz right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to David Gurwitz, Managing Director of the Charles Zinner Research Center. David, the Shanghai Stock Exchange is really going nuts right now. 10 days in a row, it's been up. They haven't seen volume like this since 1992. In fact, they said a record volume of trade went through on Tuesday. What's behind that? Are they on a special cycle, or are they just following everybody else, or are they a world trend setter?
All of the above. Now, let me break that down into its pieces. There's a ETF called FXI, which covers China. And let me look, while I'm talking to you on one device, let me see what we said about FXI on another device, because we kind of predicted this and think that it's going to be topping soon. Is it too late to buy? Was one of the client questions, and the answer is probably. He missed it. But we covered FXI. There we go. FXI we covered March 15th. Let me just find the coverage. SLB, Encanta. FXI, they're close to, then it was a short-term low. So we think this will continue, even though longer term we don't have much of a tremendous move, but shorter term we still think we've got some move to go. But again, that's the type of stuff we don't cover as much as the other things. So I always recommend, if people are going to go in those areas, put a smaller percentage of their money.
In other words, their market has realized that there is a slowdown in China that dropped the prices, and right now people are probably looking for bottom feeders.
Right. So short term you're going to have a bounce. Well, China's got major issues. One of them, I'll mention this, I don't think we discussed the last time. One is pollution. I have a lot of clients that go there a lot and they can't breathe. So I don't see, that being a positive. Number two, the largest second largest economy in the world in 1900 was a place called China, and people don't know that. They just think 40 years ago it was a backward country, which I guess it was. I mean, cell phones were very few and far between. Now you can imagine how many there are. And so in 1900 they were second biggest economy in the world, and they fell apart. So Charles was telling me once he thinks they have this innate possibility of doing it again. There's a lot of Chinese leaving the country and coming with cash to buy property in Canada. I was just in Toronto last week, and they have 150,000 people moving in every year to Toronto. And there's 800,000 people there waiting for green cards. In Vancouver, they've been for years encouraging Chinese to come. And so you've got a tremendous influx there. I think partly they're afraid of what's going to happen in their own country. So there's those two things, the environmental factor, and then there's the concern about, the overall weakness and falsified financial data. Very hard to really follow what they're saying and verifying it. And also war. There's some rumblings, China and, all around there. We've got issues that people don't focus on. They focus in the Ukraine for obvious reasons, focus on the Middle East, focus in Africa. But you've got Hong Kong. That's a potential issue. You've got other issues out there as well that I think will perk up and cause problems. Put that all together, longer term China has issues that might really make it go down. So people just have to factor that in their trading over there.
Yes, I heard a Chinese billionaire moved his family from Beijing to London for cleaner air. I don't know. I've been in London where the sky was the same color as the Thames.
Correct.
And if that's cleaner air than Beijing, that air in Beijing must be bad.
It is bad. I have a bunch of Chinese clients. I have a bunch of everything. I'm going to look. You're sitting in Canada, right? I think. Where are you located? In
Vancouver.
Vancouver, right. So I have a ton out by you. I'm in New York, and I think we have clients in 50 countries. So, look, the technology now doesn't really matter. But I've got a lot of Chinese clients that are no longer there, and for all different reasons. All very wealthy, better English than me, and so I know a little bit of what's going on there. Actually, if anyone's listening, I actually wrote a song. I'm a concert pianist also and a composer. I wrote a song called China. You should Google me and China. David Gurwitz in China. You'll see me play a song that kind of sounds Chinese. It's very funny, So they all these clients feel this Jewish kid from New York writing a song that's more Chinese than they can do, and they just find it very funny.
Well, it's interesting to see that there's such an international flavor. And I know even just 10 years ago, people didn't realize what happened in Shanghai would affect you in New York. I think today everybody realizes that.
Correct. Well, the whole world's now, currencies, who thought about them? Americans they don't really focus on currencies like they should. Also, the dollar's been so strong for 3 years, which is what we predicted. And we're near top. Not full, but the major tops more towards the end of the year, but we're at the top now. We called it. And look what happened. You've got a strengthening Canadian, strengthening Euro, strengthening Aussie. Those are good trades now. Well, we've had a tremendous run in the dollar this year because of flight. Everyone's been afraid. So there's a lot of fear. Market's been up 6.5 years since 2009. No question. 2009, 10, 2011, 12, 13, 14, more or less up, with not too many downloads. And even this year, it's been a run, but we think we are near a pretty big top next month. Next month being next week. And people just should be cautious in their positions. Cash isn't such a bad thing. It's hard to convince people sometimes because they feel they're owed a trade. And our attitude is you're owed information to not make a mistake. There's a different mindset that we focus on.
Yeah, an expert told me once that the secret to being rich is keeping your money in bad times.
Correct. That's very good.
David, always fun talking to you.
Likewise, I'm glad we worked it out. It was a little tardy, but I'm glad we worked it out, and I look forward to our next one. And I really enjoy your questions, and your listeners are very fortunate to have someone like you who asks good questions and listens.
And maybe remind people again how they can get the Charles Nenner research letter.
Sure. Just Google Charles Nenner, N-E-N-N-E-R, and there'll be a site, and just there's this big thing, there's a big indicator there. Click here and write to me. Hi, David, I heard you speak, and I want to try your research for a month for free, and we would be happy to send it.
Thanks again.
My pleasure. Look forward. Bye-bye.
My guest has been David Gurwitz, Managing Director of the Charles Nenner Research Center, their website, charlesnenner.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. That's proving to be very popular. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.